And you see that sometimes, and the main benefit there is Roth accounts are fully tax-free as opposed to tax-deferred. 401k assets and IRA assets are tax-deferred. Roth assets are fully tax-free after they're held for at least a 5-year window. However, if you have $100,000 in a 401k and you roll it into an IRA rollover, and then you say, I want to roll that into a Roth, whatever dollars you roll into a Roth, you're taxed.
Here's what I was going to ask you. Like, let's say I have a corporate job, corporate America. My company provides me with a 401k. Or let's say I'm the owner of a company. Like, let's say I'm the owner of Morales Group and I have a 401k, which I'm the plan administrator. Would I still be able to have a SEP if I have like a different business, like a side hustle? Like almost like if I had rental properties or something like that, could I combine the SEP and the 401k, or are they, you can't have them if you already have a 401k?
So yes, you can't combine them, but you can certainly have two parallel paths at the same time. One is your corporate 401k that you contribute. You work that 9 to 5, Monday through Friday. On the weekends, you're a tax person and you do taxes for people, or those dollars that come on the weekend, that can be put into a SEP. So you can have those dollars go into a SEP, and then basically your corporate dollars go into your 401k. And a lot of times people who do a side gig and they get paid, they just dump all of that money into a SEP because they're doing their main job that's kind of covering all their expenses. So they can basically take their dollars that they earn from the SEP, kind of put that away into a SEP account.
What happened for me eventually is I became incorporated. And when I became incorporated, I believe my accountant, for whatever reason, said now I needed to set up a 401k for myself. And I needed to set it up for also my employees if I had employees at that time, which I did. So what is a 401k? What is the difference between a Roth 401k and a traditional 401k? And in what scenarios can you utilize this? And what's the max that you can contribute to either one of these?
So the 401k has been around for quite some time. It's really a good way to strategically save by taking a percentage of your income or your paycheck on a monthly, bi-monthly basis and putting that away. And if you work with a corporation that has stock, a lot of times you can buy stock within your plan, and they might match that contribution. They might match it up to 5% max. So that's a very good deal because you can really front load your 401k and max it out. The annual max is like for 24, it's been raised. It's about 23,500, I believe. So you can take that percentage out to get to that max by December or get to it sooner. Some people front load it and say, I want to get there by September and front load it. So once you're in there, the company gives you certain options. It can be Vanguard, Fidelity, American funds that administer the 401k, and you will have the selection of mutual funds that you can choose from. The companies do not provide advice in terms of where to put your dollars. So a lot of times when I work with clients, I tell them to email me their plan and their options. And then I would give them some guidance. I would say, okay, put 20% in this one, 20% in international, 20% in domestic, 10% in technology, and so on and so forth, and get a nice mix to meet their allocation. Sure. So as their 10% from their salary comes in, it's split up each way depending on what percentage they choose to go into each sector. Or if they have company stock, they may say, okay, I want 50% in the company stock and the other 50% in some complementary mutual funds. The 401k Roth, mostly there isn't a 401k Roth per se. What happens is someone has a 401k and they've been with that company for 10, 20 years and they retire. Sometimes you can roll over your 401k into a Roth IRA or go into an IRA rollover and then strategically shift it to a Roth. And you see that sometimes. And the main benefit there is Roth accounts are fully tax-free as opposed to tax-deferred. 401k assets and IRA assets are tax-deferred. Roth assets are fully tax-free after they're held for at least a 5-year window. However, if you had 100,000 in a 401k and you roll it into an IRA rollover, and then you say, I want to roll that into a Roth, whatever dollars you roll into a Roth, you're taxed. So sometimes we strategically attack that by doing maybe 25% each year. So 25% will take that 100,000 and do it in quarters. Each quarter we'll move a quarter into a Roth because you would have taxes to pay on that 25,000. And you do that after the 4th year, then you have a Roth that's fully tax free in perpetuity as long as you continue to own that particular Roth. If you just open a traditional Roth without having a 401k into an IRA rollover, then the IRA rollovers and the Roths have a maximum contribution of 7,000. If you're older than 50, it's 7,000. If you're less than 50, it's 6,000. So though you can see how the 401k is much more attractive because you can put in up to 23,000 in a 401k, whereas the IRAs and so on, or you can only put in 6 or 7. However, if I may, you can combine a Roth or IRA rollover, or IRA, with a 401k. So if someone is maxed out their 401k and they're doing well, they can put another $7,000 into or $6,000 into an IRA rollover for that year. You can't just dump more money in there. Only 7,000 per year, 6,000 per year, depending on your age. And the Roth, however, not everyone will qualify for the Roth. The Roth has income limits. So if you're making a certain dollar amount and you're married or single, you might not qualify to put monies into a Roth because you're above, I think, maybe 125,000 in income or something like that. So you don't qualify. However, you can still put money into an IRA, a simple IRA.